Imagine logging into your business bank account tomorrow morning and discovering thousands of pounds have disappeared. No bailiffs, no court appearance, no dramatic knock at the door, just money gone. And the reason? HMRC used a little-known power that allows them to recover tax debts directly from your bank account. Many business owners assume this only affects serious tax evaders or companies deliberately avoiding tax. But that's not necessarily true. A single overdue VAT bill, corporation tax payment, or self-assessment liability could potentially put you on HMRC's radar. Today, we'll explain how this works, who is most at risk, and most importantly, how you can make sure it never happens to your business. What is direct recovery of debts? The power is called direct recovery of debts. In simple terms, if HMRC believes you owe tax and certain conditions are met, they can instruct your bank to transfer money directly from your account to settle the debt. What's surprising is how low the threshold can be. We're talking about debts from around £1,000 upwards. For many businesses, that's less than a single quarterly VAT payment. This means the policy isn't just aimed at wealthy tax avoiders. It can affect ordinary businesses experiencing temporary cash flow challenges. The debt could relate to VAT, corporation tax, self-assessment tax. If the debt exists and remains unresolved, it may fall within scope. Before using this power, HMRC follows a formal process. They don't simply choose accounts at random. They review whether recoverable funds are available and whether previous attempts to collect the debt have failed. In many cases, they'll focus on accounts where funds are clearly available and recovery can be made efficiently. Importantly, safeguards do exist. Taxpayers can object. There are appeal processes, and in some situations, recovery action can be stopped if it would create genuine financial hardship. However, these protections are most effective when businesses engage early. The later the response, the fewer options typically remain available. That's why proactive communication is so important. 5 ways to protect your business. Let's look at 5 practical actions every business owner should take. 1. Never ignore HMRC communications. The fastest way to increase risk is to stop responding. Even if you cannot pay immediately, maintaining communication shows you're actively managing the situation. Responding early often prevents escalation. 2. Consider a time-to-pay arrangement. If cash flow is tight, contact HMRC before the situation worsens. In many cases, HMRC would rather receive regular payments over time than pursue enforcement action. Payment plans can provide breathing room while protecting your business. 3. Know these 3 numbers. Every business owner should know what you owe, when it's due, how you're going to pay it. If you don't know all 3, you're managing your finances blindfolded. 4. Keep accurate financial records. Disputes happen. Calculations can be challenged. Good records provide evidence and support your position if questions arise. Poor records leave you relying on memory, and memory is rarely enough when dealing with tax authorities. 5. Separate personal and business finances. Maintaining clear separation between personal and business accounts improves visibility and financial control. It's not about hiding money. It's about ensuring your finances are organized, transparent, and professionally managed. Conclusion. The biggest mistake businesses make isn't always getting the tax wrong. It's hoping the problem will solve itself. Tax issues rarely disappear on their own. The businesses that avoid serious problems are usually the ones that stay informed, stay organized, and engage early when challenges arise. If you're unsure about your current tax position, now is the time to review it, not after HMRC starts making decisions for you. For sole traders, self-employed, and small businesses, the key is to keep accurate records. Digital records are the best form. MyTaxTrail offers the simplest way to maintain records digitally. Simply snap your receipts, save the details, and send them to your accountant when required. This keeps you on top of your finances and keeps HMRC away from your bank.